Hi, good day to all. This is Kelvin here. Welcome to Module 3 Trade the Markets Like a Pro, where today in this video I will share with you all the principles of support and resistance, which will actually form your first building block in your trading strategy going forward. So now, before we start, let's take a look at the disclaimer slides first. Alright, good. So before we even jump into the the key drawings on how to actually draw a proper support and resistance line on a graphical price chart, let me share with you all the four main principles of support and resistance. The first principle, the purpose of why we are doing support and resistance is to identify past behavior threats of market participants in any liquid traded asset classes, where in this area or zone where price action are likely to react significantly in the near future after they started to form support or resistance in the past. Secondly is to establish trading setups. So the building blocks of any trading strategy is to identify whether your trading setup of that particular trading strategy based on the current price action, does it worth to actually take the risk or to establish a trade based on the calculation of a reward risk ratio derived from support and resistance levels. Thirdly, higher time frames levels are more important. So what do I mean by this? Support and resistance identified on the daily, weekly, or monthly chart have a more significant impact on future price action versus support and resistance on an hourly chart, 15-minute chart, or 5-minute charts, where these shorter time frame charts only take a few hours or a few minutes to actually form in terms of price action behavior. And also, lastly, in terms of support and resistance, think of it is that they can be classified in terms of a price zone rather than a singular price level. All right. Okay, so basically, what is support? Support is like a floor where price action tend to rebound, and reversely, resistance is like a ceiling where price action tend to stop advancing. All right, then for both support and resistance, they can be actually be drawn on the horizontal line or a trend line. So what do we mean by a horizontal support? Okay, take this euro dollar chart as an example. This is the daily chart. So we could see euro dollar at 1.16 level, it actually managed to connect a similar lows at this 1.16 level, where we do expect price action to actually follow a similar price behavior track in the past, where price hit this level and it start to shape a potential rebound going forward. And if the price of any particular instrument, let's say this is the case of Facebook, it started to actually trend higher. So what we could do is that we could actually draw a dynamic support line. What do you mean by dynamic support line? Dynamic support line is not the horizontal support line where price is fixed. This line try to actually, it will actually goes higher as price continue to trade higher, which means we call it a ascending trend line support, where we connect at least three higher lows because to make it stable rather than two higher lows. Then conversely, for a horizontal resistance, this will be the price action on gold in the last 3 months, where gold actually refuses to actually break above this 1967 level, connect two similar swing high. So we have one high, two high, and in fact we have three highs over here for gold. Then we also can connect a trend line resistance. We call it a descending trend line resistance by connecting at least three lower highs, as seen on the chart of Facebook over here. All right. So now, if a particular resistance level has already been taken out, if you look at this in over here at this point in time, it doesn't mean that a resistance will always remain resistance in the future. So this one is in the past. We have two swing highs, resistance level at 119.56. This is for the euro dollar. It has staged a breakout of this resistance, and what we could see over here is that it starts to come back and it starts to rebound exactly at this resistance level at previous resistance, now turn into a support at this 119.56 level. And in fact, just recently in a couple of weeks ago, in fact, pardon me, it's 2 3 days ago, it actually come very close to this level again. So this is what I call a zone, not exactly at 119.56 but at 1.20 level, and it start to shape a bullish candlestick pattern, which is positive, which I covered earlier on in my basics of candlestick, where price action tend to actually price action actually close above its opening price. That's from a what you call it a single day bullish candlestick. All right. So what we have over here is what I want to share with you is that a resistance need not be always a resistance. Once a resistance has been taken out, it will tend to turn into a support level, or we call it a pullback support level. Right. So conversely, if a support level previously this was supported, trendline support starts to break down, price action goes up and react from this former support now turns into a pullback resistance. So the same principle holds. A support level need not to be always a support level in the near future. Once it's broken down, it will actually turns into a pullback resistance like what we see on the price action of Amazon.com recently. Right now, some basic golden rules of trading while using support and resistance is bullish opportunity will be established near or at support, but never establish bullish opportunity near or at resistance. Bearish opportunity will be established near or at resistance, but never establish bearish opportunity near at support. So intuitively, what it means over here is that, let's say for example, if price action starts to pull back or come close to a support, this is where we can take a risk. Okay, in my next video, I will highlight more about rewards with ratio. Just basically is that once price level hit this support level, ideally we want the price action to rebound from this support. All right. So let's say if we will take the risk over here at this point in time, rather than in the middle of nowhere, our expected risk of taking this trade is much lower. Why? Because if price break below that support level, we could actually get out of that position ASAP. All right. So more of this, don't worry, I will share with you all in my next following video, where I will share with you more in detail how to calculate reward risk ratio, how to combine support and resistance with other technical indicators to establish whether that particular trend that you are trading in is that particular uptrend. If you are trading close to support, is it still strong to potentially support a further potential up move. All right. So same thing as let's say if price action is coming very close to a resistance. All right. So we don't actually have a bullish opportunity near a resistance. Why? Because who knows, a resistance level, the principle of resistance is for the price to actually take a break. It's like a ceiling to prevent further price action from advancing. So we only establish bullish opportunity when price break above resistance. All right. And we also establish bearish opportunity when price break below support. All right. Now, another basic golden rules of trading is that I'd like to share with you all 3 pointers is before I take you all through a practical walkthrough on our CMC platform by opening up a graphical chart. There is old saying that the more times a support and resistance is tested, the stronger it becomes. But this is not necessary, because think of it in a way that, let's say if a support level is being tested a lot of time, that means there's a lot of bullish buyers trying to break. Pardon me. If this resistance level is being tested a lot of times, that means there is a lot of bullish buyers that's trying to break above this resistance, which means that the thickness or the ammo of that ceiling is getting thinner and thinner by every time it got tested. Similar for a support level, the floor is getting tested and tested on the downside, which means sooner or later the defense of that floor is also getting weaker. So how do we know that whether a support is weak, or how do we gauge a weak support? Is to look at the prior actions of the price of any particular instrument for lower highs. Okay, don't worry about this. Later I'll share with you an example. And how to gauge a weak resistance is to look for price action for higher lows. All right. So now let me go through a practical example by sharing with you some two instruments most recently of this support and resistance principle that we can actually apply on. Okay, let's take a look at this example of Microsoft. So let's say Microsoft over here, we are, okay, this is a daily chart of Microsoft. So we are at 19th of Jan 2021, this year, not too long ago. So what we see Microsoft over here is that, hey, previously from the March low is trading in a series of higher high, higher low. So we know that it's an uptrend. Over here, very clearly, it starts to go sideways, and we could actually immediately draw a support and resistance to actually establish what is going on and how do we actually tackle a trading setup from here. Oh, so let me draw out the support level first. So support level, like I said over here, is that there's a rebound here. If you look at this swing low, and this swing low over here, there is a higher low, a serious higher low. So we can actually draw a trend line support or ascending support. All right. Okay, so as you could see over here, how I draw this support over here is that we will connect the exactly right at the lower low. Why? Because this is where the price actually reacted from there, and not cutting into the candlestick of any candle body. That means I don't draw something like this, all right, which is cut into the candle body. All right, so this is not exactly where the price actually reacted, because if we draw like this over here, we will not be able to establish a reward risk ratio calculation from a precise level basis, because once we are talking about using technical analysis to trade, we need to know what is the precise level for us to get out if the trade goes against us. So what I do is that I will connect the lows, if not try to touch the body of the candle without actually intersecting the body of a candle, to give me more or less the kind of a exact price action feel of how the price action react over here. So what it means that over here is that, let's say price action rebounded on this day, this is a supported. So what we do over here is that, hey, right now we want to establish a bullish setup near the support level because the prior trend is still up. In this scenario over here, I would say that the reward risk ratio is pretty prudent or much more attractive. Why? Because price action hasn't rebounded too far. All right, if price action rebound too far, that means based on this level here, let me highlight to you. I draw a horizontal line. Okay, at 211.59. So based on this level, I will actually use this support level as my basis for my stop loss level. Don't worry, I will share with you all in my next few videos how to actually properly calculate a stop loss. So most of you have seen over here is that, should I place my stop loss right exactly at this support? So the hint is no, you got to place it a few ticks below, but how low is it? So there is actually a scientific, or what I call it, a mathematical way to actually calculate a proper stop loss level in my reward risk ratio calculation. But nevertheless, use it as a basis first. This is where I base my stop loss level, which is very attractive in terms of risk. So if I'm wrong, that means price break below this level, I will get out fast. All right. Then now the next key thing we'll ask ourselves is, how high can this price go at this moment in time? So this is where I got to establish a resistance level. Okay, so if you look at the highs of this, the high of this, and the high of this, it's similar high, right? So what we could do over here is that I could connect the high. Okay, let me put this in red. Okay, at the level close to this 226.88. So what you mean over here is that if we were to do a proper reward risk ratio calculation, not too bad, it's about 2:1. So we could actually take a potential exit position here as my exit target for this short-term trade setup. Okay, so now like I share with you again one of the golden rules of saying that, hey, we know this is a resistance, it tested 3 times, but how would I know whether this resistance is strong enough or not? Because like I said earlier on, resistance can also be broken and turns into a support. So the next what I call step that we got to take a look over is that if you look at the prior action of the this particular we call it instrument is Microsoft. So before, in this resistance form, is prior action. If you look at the lower lows, the lows are getting higher. This low is higher than this low, higher than this low, higher than this low. That means every time price hit the resistance, it form a higher low, hit the resistance from a higher low, hit the resistance from a higher low. So what it means that potentially on average, market participants or the price behavior of people and participating in Microsoft is getting more and more aggressive by bidding up prices higher when price start to pull back. That means in terms of probability, there's a potential that this resistance can be taken out easily for price action to hit the next resistance, which is the next swing high here, which is the all-time high at 232.53. So let's see what happened. So indeed it goes and it went past it, establish a new resistance over here. Okay, a new high, pardon me, a new all-time high. And where we are right now is, the principle of it is that, hey, it's coming back to a support level. Like I said earlier on, former resistance now turns into a support. That means what we are seeing now over here is this. Okay, let me remove this because this is a dynamic support. Because what I mean by dynamic support, because it's a trend line, so every time price action goes higher, this trend line support will get higher as well. So right now we comes to into this support zone of close to this 226.88 to 219.57. So it's very interesting to watch how Microsoft actually react in this couple of days, since that right now it's really pulled back to a former resistance now turns into a pullback support, as well as this dynamic support from this ascending trend line support level that I draw earlier on. All right, so now let me take you through another particular instrument, will be the euro dollar. Okay, let me enter. Oops. Okay, let me open the chart of euro dollar for you. Yeah, from here's euro dollar. Okay, so for euro dollar, okay, let me clear the template to make it a clear template for you. Okay, so for euro dollar, what I'm going to do is that I try to, well, support resistance so can draw on a lower time frame chart. So let's say if you are trading FX, most of the time will tend to actually look at the lower time frame. Okay, so let's go back in the past. Okay, so this was one of the principles I shared with you all earlier on, is that how to gauge the strength of a support, whether it's weak or not. All right. Okay, so now let's take a look over here. Okay, so let's say we are looking at this time frame, 2nd of February 2021, not too long ago, about 4 weeks back. So price action actually formed kind of a supported over here. All right. If I were to connect the lows, okay, notice that one swing low, the third swing low at about 1.2058. And if you look at how the price actually reacted after it bounced from this support level, this horizontal support, is if you look at the highs of the euro dollar, notice that this swing high here is lower than this swing high, this swing high lower than this swing high. That means every time the price action starts to bounce off from this support, the reaction you get from it is that the high doesn't seem to get higher or similar high. That means, i.e., on average, the bearish pressure seems to be building up on euro dollar, because market participant is not confident in bidding euro dollar higher to form at least the same high or higher high. So those who could actually draw a resistance, this could be a resistance as well. All right. Okay, so what it means that if I were to play, because still remember one of the golden rules of, we call it support reset, is to establish a bullish opportunity near the support, which is it actually indeed rebound from the support over here. All right, it bounced from the support over here, but by looking at its prior price action, once it react from this support level, is it start to form not similar high or higher high, but lower high. So with this principle in mind, right, forming lower high, that means I know that, hey, this particular support level is indeed not very strong relatively. So with that in mind, right, I will not actually establish in terms of a bullish opportunity, given that the probability for it to rebound to at least this resistance or even higher seems to be pretty low based on how the price action react. So what I could do over here is that I may want to establish what I call a bearish opportunity instead, by waiting for the break of this support level, because now it's very close to support, because the resistance here is quite high, quite far away from the resistance at 1.2143. So I'll wait for the price to break down over here. This is where I will actually establish a bearish opportunity by looking at the similar basic principle of establishing bearish opportunity through the break of support level. So this is one reason I want to share with you all, is always the golden saying doesn't always necessarily remains true. Like the more times the support tested 3 times from here, it doesn't mean that price action is strong enough to actually bounce back up to the resistance level. Then thereafter, price action of this euro dollar starts to trade pretty lower from here. Okay, so with that, thank you for your time in my module 3 support and resistance principle that I share with you all, and I see you all next in my trade the markets like a pro video.